A big tax cut ahead of the festival season here in India, and what you get is a big shot in the arm for growth. The Modi government has done just that. Slashed goods and services tax rates on nearly 400 items, from daily essentials to small cars. The government has decided to lower the GST with an aim to fire up festive spending and shield India's economy from the global headwinds. Here's what we are looking at basically. Taxes on most items of everyday use and premiums on insurance policies and vehicles have been cut. The structure is also simpler now. There are only two rate slabs basically, 5% and 18%. Goods and services tax or GST was launched 8 years ago, remember, with the aim of simplifying taxes and reducing the compliance burden. But it was criticized for numerous tax categories, and to simplify this, the GST panel approved the two-rate structure of 5% and 18% instead of the four rates. The government panel has approved cuts in consumer items like toothpaste and shampoo to 5%, and on small cars, air conditioners and televisions to 18%. GST was also removed from all individual life insurance policies and health insurance. Now, this is India's biggest tax overhaul since GST was rolled out in 2017. On the other side, sin goods like cigarettes, chewing tobacco and luxury cars, their taxation rate now goes up to as high as 40%. Now, the rate cuts will be implemented from September 22nd, that is the first day of the Hindu festival of Navratri. And during the briefing on September 3rd, the Indian Finance Minister said that the reforms are meant for the common man, lower taxes, fewer slabs, simpler compliance. The GST reductions are expected to boost consumption as the Indian economy grew at an unexpectedly higher pace of 7.8% in the quarter to June. Now, this is how the experts have reacted. Citigroup estimating the cuts could lower inflation by over 1 percentage point. That means cheaper goods and more money in the common man's pocket. Economists say this could add as much as 0.6% to India's GDP in the next year, and that's a major boost, especially at a time when consumption already makes up 60% of the economy. And with the consumption rate cut, the Indian government is betting big on domestic demand. Just to put this simply, what India does not sell abroad, it wants Indians to buy at home. And markets are already reacting. Automakers and consumer firms rallied, bond yields dipped, which means that investors are not too worried about the fiscal math. Still, the numbers are serious. The GST rate cuts mean a revenue loss of nearly 48,000 crore rupees for the government. But officials say it is sustainable, and economists agree the consumption push will more than offset the shortfall. SBI's chief economist calling it, quote unquote, almost insignificant or even positive, quote unquote, for the fiscal deficit. In the end, this is more than just a tax tweak. It's a statement of intent by the Modi government. India will power growth from within, no matter the global headwinds. And as the festival season kicks in, all eyes now on whether lower prices translate into higher spending, and whether Prime Minister Modi's big bet on GST reforms delivers the growth dividend that India needs. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.